Your strategy has to involve your mindset, and your strategy then involves the actions that you take to move you from where you are to where you want to be.
I'll start with what Visa isn't, right? Visa doesn't issue credit card. We don't issue credit. So Visa doesn't do that, which surprises a lot of people.
We'll use a phrase like, well, things changed, but things don't change. People change things. All the legislation that has been passed, somebody advocated for that. And so International Women's Day is to commemorate that history of women making change.
Several of the banks have started to migrate their existing debit card portfolio to chip and pin EMV technology. So the SMEs are going to benefit from a wide range of customers who previously did not have a credit card, but only had a debit card.
Andre Falby from CIBC FirstCaribbean is a senior manager credit risk. And when it comes to credit risk, those words to me, I'm just like, does that mean that I have to have a business and credit and risk and all these fancy terminologies that keep popping up? And it's just certain things that are basic that a lot of us don't know just yet. And I am so ready to learn. I hope you are too. I want you to share with the audience what does your job entail? What does it mean to be the manager of credit risk?
I guess in a nutshell, what I do, I am a credit adjudicator. So I'm the guy behind the scenes that says yes or no when multi-million-dollar credit applications come in for businesses. I'm also an adjunct faculty lecturer at Roytech, and one of the courses I teach there is personal financial management, personal financial planning. And so I engage a lot with, different people on financial planning and, financial advice. So the topic is really going to be geared towards the individual. It's geared to all of us. It's not geared towards business today.
We're in a situation right now that, a lot of people didn't plan for. And as much as some people say, have some sort of nest egg, I wasn't taught that growing up. I didn't realize my friends were it was almost like a secret, It's like, oh my goodness, all my friends have money set aside and I'm still figuring it out. What advice would you give to somebody who didn't necessarily have that sit down or that knowledge of what's going on, but also trying to catch themselves? It's kind of like, I don't have a lump sum, but I also don't have a job. What words of hope will you share with them?
Okay, I think, of course, you've got to, get information, get financial advice, and, get real data, what is happening out there. Look at alternatives. If you do have some money and you need to put it somewhere safe, look at the alternatives in the environment to see where exactly money goes. Now, in a perfect world, we should all have 6 to 12 months of living expenses saved somewhere liquid, in a money market fund or savings account, so that whenever the unfortunate happens, we're good. But the reality is a lot of us may not have that luxury. We probably spent our time raising families, getting on with life, building houses, paying car loans. Life sometimes takes a toll on our wallets and all our good intentions to save and put aside that ideal 6 to 12 months emergency money. But sometimes the unfortunate may happen and you may lose your job. So what happens? And you can still survive if you have lost your job. The loss of employment does not mean the end of the world. It's basically a transitionary period. It means you're going to have a period where there will be no income, but you can take your resources, and we would all have resources. You've got some, it may be limited financial resources. You may have some other resources that you can probably put into overdrive to start earning in another capacity. But we all have resources that we can use to take us forward. must-do list if your job becomes a casualty of the pandemic. And by casualty, I just mean financial casualties. So if you've lost your job, it is an emotional time, it is a stressful time, but it is also a time to make financial decisions. If your job has become redundant, you're retrenched by your company, then severance pay is a factor. In Trinidad and Tobago, the minimum severance payment is set out under the Retrenchment and Severance Benefit Act. The minimum under the Act is calculated quite simply 2 weeks' pay at the basic rate, and that's your basic salary without any benefits. Basic rate for each year of service for workers who have completed more than 1 year but less than 5 years of continuous service, and 3 weeks' pay at the basic rate for the 5th year and for each succeeding year where the worker has served the employer for 5 years or more. Severance pay, and this is important, severance pay is tax exempt up to $500,000. First thing you want to do is divide your expenses into categories. And we're going to divide into 3 categories. The first is fixed expenses that you must pay. And your must pay expenses would be rent, your mortgage, loan payments, life insurance, and I'm saying life insurance. Life insurance is important. Property insurance, if you've got to pay your house insurance, your car insurance, property must be maintained. Utilities, so your phone bill, light bill, cable, internet, utilities continue, WASA rates. Continue these payments as scheduled. Falling behind will only place you in a worse financial situation. The second category would be expenses with room to trim. And we all have some room in our budget that we can trim. This could be things like eating out, entertainment. The third category would be expenses that you can suspend. So the expenses you can suspend during the unemployment period. And these would be things such as your pension contribution, your annuity contributions, monthly savings plans. Notice I said suspend, not cancel. Okay, so we're suspending the payments, but you're going to leave the core arrangements in place. So you're not going to go cashing in your annuities. You're not going to close off your mutual fund accounts. You're not going to close off your special savings plans or whatever you may have. So you need to make that severance and savings, if you've got some savings, last as long as possible. If you normally use your credit card for your monthly expenses, you use it for the grocery and to pay bills, and you say, well, I get points, I get miles, I get whatever, but you pay the entire balance off at the end of the month, you can continue that process, because once you pay your entire credit card bill at the end of the month, it means you're not carrying credit card debt, you pay 0 interest. If that's your method, by all means, continue that method. If, however, you are carrying a credit card balance, you probably ran up the card to pay for last year's frontline costume, didn't pay it off as yet, then this is the stage where you might probably want to put in a line in your budget to make some payments on that credit card. And you don't want to make the minimum monthly payment. You want to make a bit more, because at the minimum, it'll probably take you 20 years to repay that credit card. So, you probably made that mistake and you carried the balance. That's fine. Just, put a target to pay it down as quickly as possible. Set up interim arrangements with your banker and insurance agents in line with your new budget. Banks have been willing to accommodate people who have lost their jobs. So, go in to speak to your bank officer, see if you can make an arrangement to pay maybe interest only on your mortgage and loans for the next 3 months, if possible. If that's not possible, then maintain your monthly payments. Payments to annuities, pension plans can be suspended. They will not lapse like insurance policies. But remember, we're suspending payments. Do not cancel, do not cash out. Sometimes we get emotional. Oh, I've worked here for 8 years, I've worked here for 10 years, and they're sending me home. I don't want anything to do with this business again. I'm take my pension and go. I'm cashing out. That's an emotional response. You don't want to get emotional. You have up to 1 year to transfer the pension to another registered pension plan if you get another job within the year. Or you can leave your pension in trust until the minimum early retirement age, which is 50 to 55 for most plans. And if you and the reason why you want to leave your pension arrangement, leave your pension in place, pensions are simple and pensions are complex. In the simple side of pensions is that it's for retirement. The complex side of pensions is that there are tax considerations, there are penalties for early withdrawals. The pension fund itself may have a whole list of rules and regulations with respect to and guidelines with respect to what happens if someone were to exit or cash out early. And in most situations, you are going to lose financially if you withdraw from your pension prior to the legal retirement age. So as far as possible, leave that pension alone. And especially, where you've got cases where you may have contributed and your employer may have contributed. There may be rules with respect to what happens to the employer's contribution. So, you want to leave that pension alone. I can't say it often enough. We don't mess with pensions until it's retirement. And the last bit of advice: resist the urge to take a rest. I know it's a very stressful, it's an emotional time. You're under a lot of pressure. You've lost your job. That's not an easy thing to go through. But right, so use your time wisely. Make plans. Rejuvenate yourself with meditation, physical exercise, but don't lie in bed worrying about the future. And don't take more than a week if you must before you start your action plan. Now is the time to consider entrepreneurship. Consider a career change. It's never really too late. You may have probably toyed with the idea of changing careers, of going into a business, doing something other than your 8 to 4. But life is such that you can't let go of that 8 to 4. You've got bills to pay, you've got a mortgage to pay, you've got kids to put in through school. So you've been doing that. Now the universe has given you an opportunity. Why not take that opportunity and see what's next? All right. With careful financial planning, you may have 6 months plus of financial comfort or room that you can, take to move on to the next step.
But that was like my first experience with money. Very, very first experience.
I've been in banking since I was a teenager.
Great. So we're back, and my question has to do with the statement dates, right? So you have the day that you have to pay before you incur interest, but then you also have the statement date. Can you like clarify the difference there?
Okay, sure. The statement date for most credit cards is usually a very odd date. Sometimes it might be the 12th of the month, for example. If the statement date is the 12th of the month, what it means is that on, let's say, January 12th, the statement is cut off, in that all your charges up to the 12th is stopped. That's your balance. And whatever balance is there on the 12th of the month is the total amount that you need to pay. And the statement will give you that balance as at the 12th. Now, it means you've got to, if you pay your entire bill, if you pay that balance as at the 12th, you will not pay any interest. Now, the payment date might be the 30th, or it might be the 2nd or 3rd. Usually it's about the 2nd or 3rd of the following month. So statement date, January 12th, payment date, February 2nd. It means you've got to pay that balance on or before February 2nd to avoid interest. Once you pay the entire balance, then no interest is charged. If, however, you pay the minimum balance or something short of the total balance, then interest will be accrued on the balance from the 11th of, sorry, from the 13th of December to the 12th of January. And the interest would be at 24% per annum, which is 2% per month. And of course, all charges, there'll be charges after the payment date, but that goes for the next cycle. And that interest that's accrued for the December to January 12th period, that will then show up on your February 12th bill.
If I don't have children, I don't have dependents, what is the point of life insurance?
And this is where I raise the ire of all my friends in who sell life insurance policies. If you do not have dependents, if you don't have children, if there's no one who is financially dependent on your income, then you do not need life insurance. What you need is insurance to manage the risk that you actually do face. You need critical illness insurance. You need a personal pension. You need medical insurance, medical health insurance, right? So you buy insurance to match the risk. Severance is usually never outlined in an employment contract because the minimum severance benefit that's a law. So all companies must comply with that severance act. It's the law. Just like you can't run a red light because it's the law. If you sever someone, you've got to pay severance. That's the law. So there's no need for it to be in an employment contract. What may end up in an employment contract is sometimes enhanced benefits or things like gratuities or some conditional payment if a contract ends or if it is terminated. But the minimum under the law, that's the law. Your company has no choice in that matter.
Why would an insurance agent sell an annuity plan to one in early 20s with a retirement age of 70?
Time is your friend, and the longer you have away from retirement, the better off you are. So someone buying an annuity, a pension in their 20s to retire at 65 or 70 is going to retire so much better off than someone who started in their 40s or 30s or 50s. The earlier you start, the better. And, if, you start making contributions to a pension, an annuity in your 20s, it becomes a habit, and habits are things, we're creatures of habits. We tend not to break habits. So if you get into a good habit in your 20s, that habit is going to continue with you. So by the time you're 40, you would have been contributing to this pension for 20 years. All right, which means you'll be well on your way to a secure pension. All right, and you're going to be much better off than someone who, in fact, someone starting in their 40s is going to have to pay probably more than 3 to 4 times what you're paying just to catch up with you, because of that's the magic of compound interest. Time is in your favor. If you start young, you can make small contributions for a long time and come out way ahead of the game. So yes, get into that pension plan very early.
company be liable to legal action should the notice period not be adhered to if the purpose of termination of employment is due to restructuring?
If someone is terminated, I mean, terminated means your job is redundant and you're not offered something else. You're told you've got to go home. Then a company must follow the letter of the law. It must give 45 days notice, and it must provide a pension payment in accordance with the schedule.
So you mentioned in your presentation about, the niceties that need to come out of your expenditure while under unemployment and trying to find your way. So question about multiple incomes, right? Because in our culture, we tend to have more than one job. Somebody has something on the side and they're doing this thing on the side. What advice would you have for individuals who may be thinking, you know what, now is the time for me to go head first into entrepreneurship? However, their bills may not necessarily parallel to that idea, so the reality and their dreams don't necessarily mesh. So do you have any advice on that?
This is where you make decisions based on information, based on data. Now, the world is changing. I mean, the concept of a permanent job is really quite a myth. I mean, no job is permanent. So, being self-employed, getting involved in something else, that could be a sustainable, a very viable means of earning an income. What you need to do is take your time and research the market, research what you're applying to do, and see, is it, how realistic is it? So, for example, you may love to make pastels, but can pastel making be a full-time vocation? In the current system that we know it, where people buy pastels for Christmas, probably not. If somehow you can figure out a way, well, maybe what if I freeze pastels and I sell frozen pastels, and I somehow, go on a marketing program, I convince the market that pastels can be eaten 12 months of the year. Do your research, see if people are willing to go that route, and who knows, it might work. I don't, maybe it will, maybe it won't. But, if it's something you've got to explore your options, explore your talents, explore your resources, see what's out there. The world is changing. What might have been acceptable 5 years ago probably isn't acceptable today. Look, your side hustle might very well be the next full career. Who knows?
A lot of times the information that we are fed on social media is driven by America, right? We're fed so much North American content. But from somebody who is unemployed and looking for, their rights and understanding severance and pension, what are some of the websites and resources that they can go and learn about, what is in their right for being unemployed?
I think anything with respect to labor and employment, you can look at the Ministry of Labor website. If you go to, the Government of TNT web portal, there are links to all the different ministries. You can look at the Industrial Court website, that has information on, anything within the Industrial Relations Act and any laws relating to employment and severance. If you are in a unionized environment, speak to your union rep. That's why you're paying dues. And in fact, if you're in a unionized environment, you've got access to legal representation from the union. But yeah, do research and look for credible sources. Official sources. Don't go on Facebook and ask a general question. What should I do if so and so? Because you're gonna get all those armchair warriors giving you lots of advice. So
what we're looking at is money management tips, right? And with that said, I want to ask you, because in your presentation you spoke about, the emotional side of being unemployed. I think that's So important. And when I get bad news, the older I get, the longer it takes for me to actually recuperate. So 1 week after that bad news, I don't think I'll be in the same state of mind. So the question I want to ask you is, somebody might take a little longer. What point should you stop dipping into your savings? Because you may have, let's say, 6 months. I mean, that's a privileged point of view, or 3 months. At what point does the siren go off and you say, okay, I need to come out of this rut mentally and I need to be able to start looking for income? Any advice on that?
Yeah, and that's why I said, as far as possible, just try not to take more than 1 week to really absorb the situation and get involved. Because the point in time that you stop dipping into your savings is when you have a source of income replacement. In other words, when you get another job, or if you've got a business off the ground that can replace the income you've lost. Until that happens, you have got to dip into your savings and whatever severance you have gotten. So, and that's a limited resource. So that's why you've got to, you really don't have the luxury of time. And I guess the banker in me is the harsh side that says, yeah, just take a week. Okay, some people might need 2 weeks.
What is the biggest challenge that you see when it comes to the money management?
The biggest challenge with money management is, well, I guess 2 things. One, sometimes as individuals, we probably don't handle lump sums very well. We're used to getting our money in neat packages. Every month there's a payday, you get your salary, and you pay your bills out of it. Next month, another salary is going to come in, and life goes on. But, if you've lost your job, things are different. You now have a lump sum in front of you and no salary. So that requires planning. It requires discipline. All right. And again, another big challenge would be information. Having access to correct information, trustworthy information is very important. Where do you put your money? Someone might get a lump sum, and someone's going to advise you, oh, you know what you should do? Put that money in the stock market. You probably can't because you need liquidity. So, or someone might say, just put it all in a savings account. There are options. So what you need to do is look at your options and, try and get knowledge, try and understand what happens to money, try and understand, what's the impact of placing my money in one account versus another? What's the impact of, paying off a loan versus keeping, my cash and just paying the loan as it should?